Welcome to Equal Ground Headlines. I am Samuel B. Williams, bringing you your balanced coverage for trending top stories. Europe's economic engine, Germany, is running out of steam. New data out Friday shows German unemployment is rising faster than expected as an industrial slowdown grips the country. The number of jobless Germans jumped by 26,000 in March, when economists thought it would only tick up by 10,000. That may not sound huge, but it's the steepest rise in unemployment since late 2024. A clear sign that an anticipated spring rebound in hiring isn't happening. The seasonally adjusted jobless rate now sits at 6.3%, the highest in over a year. Germany, which narrowly skirted recession in 2023 and 2024, is still struggling with what experts call an economic malaise. High energy costs, lingering inflation, and weaker demand for exports have all combined to undercut growth. The country's huge manufacturing sector, from automobiles to chemicals, has been especially hard hit. In fact, some of Germany's flagship companies are making headlines for job cuts. For instance, Volkswagen and other automakers are slashing jobs as orders for new cars slow down. One ominous indicator: job openings have plummeted. There were 64,000 fewer vacant positions in March compared to a year ago. Businesses clearly aren't expanding their payrolls like they used to, reflecting caution about the future. The head of Germany's labor agency noted that the usual uptick in hiring that comes every spring has been noticeably slowed by the broader economic slump. It's a bit of a paradox because Germany also has long-term labor shortages in fields like skilled trades and tech. But in the short run, weakness in traditional industries is the dominant force. What's making matters worse is a brewing trade conflict with the United States. In a development sending shivers through Berlin, U.S. President Donald Trump announced he will slap a 25% tariff on imported vehicles next week. Germany, as Europe's car-making powerhouse, is squarely in the crosshairs. Luxury brands like BMW, Mercedes-Benz, and Audi rely heavily on the U.S. market for sale. A tariff would make their cars more expensive for American consumers, likely hurting demand and forcing cutbacks at home. Moody's Analytics warned that if Trump's auto tariff stays in place, it would deal a severe blow to German consumer confidence and employment, particularly in the auto sector. This impending tariff is part of a broader Trump trade offensive that has Europe on edge. Germany's economy is export-driven, so anything that restricts access to big markets like the US or China is a gut punch. Already, German business morale has been fragile due to slowing orders from China, where the economy has cooled, and uncertainty around energy prices after Russia's gas cutoff. Now the US tariff threat is a new X factor. No wonder German officials are scrambling. Chancellor Olaf Scholz, heading a coalition that succeeded Angela Merkel, has been on the phone with Washington, trying to avert a trade war. Hoy officials are discussing retaliatory tariffs on American goods if Trump's car duties hit, hoping to pressure for a reversal. Meanwhile, German inflation, which had been painfully high in 2022, finally came down to more tolerable levels by early 2025, but not without side effects. The European Central Bank's series of interest rate hikes cooled price increases, but also dampened investment and credit in places like Germany. Now inflation is around 3–4% in Germany, a far cry from the 8% you peaks, yet growth hasn't rebounded. In response to these headwinds, German economists are urging fresh stimulus. There are calls for the government to boost investment in infrastructure and green tech, to create jobs and modernize the economy. Carsten Bitzeski, a prominent analyst, noted that businesses' hiring plans are still declining, suggesting the labor market will weaken further. His implication: without a turnaround in growth and investments, Germany could see a protracted employment slump. There's also a political angle. The far-right alternative for Germany, AfD party, has been gaining in polls, feeding off economic anxiety in industrial regions. If unemployment continues to creep up and factories keep cutting shifts, public discontent could rise, potentially reshaping Germany's political landscape as it heads toward elections in 2026. For now, Europe's heavyweight is in a delicate spot. A dire economic situation, as one industry group put it, with even iconic sectors like autos under strain. The hope is that if global conditions stabilize, say if the US and EU reach a trade compromise, or if China's economy picks up, Germany could find its footing later this year. Spring didn't deliver the usual bounce, but perhaps summer or fall might. But if Trump's tariffs do kick in and stick, Germany might be looking at a 1–2 punch. Higher costs for its exporters and likely European retaliation that could inflame a transatlantic trade war. That's the last thing a floundering economy needs. As of now, executives and workers across Germany are anxiously awaiting April 2nd, the day the US tariff is slated to be formally announced, all while trying to navigate the hard reality of slowing economy at home.